What's up, my crypto legends? In today's episode, we are taking a look at the price of Bitcoin on the 4-hourly time frame. Yesterday, I explained how important this range is in between $26,500 and $27,000. If we lose this level, of course, we're going to have a big major leg down. But what if we do hold it as support here for the coming days? I'm going to explain that potential trade setup and how we could get a massive bounce all the way to this level over here. I'll be explaining with Fibonacci and also looking at Elliott wave theory on how this is a possibility right in the coming days. I'm going to explain also why I still remain bullish on the S&P 500 in the coming weeks. Of course, we could still have some major pullbacks. And remember, guys, we do have some important news this week. We have durable goods orders on Wednesday and also GDP growth on Thursday. Okay, that is the rate coming on Thursday, and we could see some volatility on the market, so we want to stay protected. Make sure to stay tuned in this episode to know the potential levels that I'm looking for Bitcoin and the S&P 500. Hi there, Andy here. Welcome back to another episode. If you are new to the channel, make sure to subscribe. We do daily TI on Bitcoin, crypto, also do live streams to connect with the community. Not a financial advisor. Do not buy or sell anything that I say. If you do so, do your own research. Let's dive in here straight into the Bitcoin chart, guys, because what I want to explain after yesterday's video where we did talk about, hey, if we do start losing this low here of $26,500, how this could be a massive big drop. Now, we need that solid breakdown with volume to actually confirm that we are going to go to much lower levels. On the other side, what if we do hold this range in the next coming hours, right? We're just about to come down to test the lows from Saturday. We didn't test it. We had a little bit of a bounce, but we are still inside of the range. I'm in no rush to take any of these trade decisions. Of course, if we were to have a leg down here and fail to break out from this low, we are likely going to get a larger relief pump all the way up here, potentially to the 50% Fibonacci from this pivot to this pivot right over here. And you might ask yourself, why to the 50%? Well, we can see here some impulsive moves to the downside, right? 50% is around about $28,800. It could have another leg up here to 29.2, which is the 618 golden pocket from this leg down. Now, if we do take a look at the highs that were created on the 14th of April, which is at $31,000, we had a pretty decent corrective move, as you can see here. We had a relatively good bounce, and then we had a massive move down. If we do see this huge impulsive wave, it does make sense that that could be a third wave on Elliott wave theory. So if we do take a look at the counts here, right, on Elliott wave theory, this is the ultimate high that has been created the last few weeks, right? In April, we had $31,000. We had the first corrective move, first impulse, and then we can see here the third impulsive wave down. Now, this is the fun part. Are we forming here the fourth wave? Are we going to go much higher? Well, I can already tell you that if the lows are tested and it fails to break out and we get acceptance back above the 27,100, we are potentially going to create a much larger ABC correction, okay? And this is how it could turn out, having that nice ABC kind of correction all the way up here to this range, forming like an inverted head and shoulder and going to higher levels. You might think to yourself, hey, an ABC correction cannot go above the fourth wave. Well, it absolutely can. Yes, of course it can. So this is something that we are going to be paying attention in the next coming hours. Of course, you might think to yourself, okay, Andy said that, you know, this could be a failed breakout. And it, you know, if it's a fifth wave, the fifth wave is usually smaller. Well, no, the fifth wave can also be very, very extended. This is why we need to check out the next coming hours on how the next movement is going to be for Bitcoin. Because if Bitcoin does get below $27,000, potentially testing $26,500 this low over here, and then starts a relatively nice recovery, we are very likely to come all the way up, at least to get above $28,000. Okay, guys? So this is something that we are going to be paying attention here in the coming hours. Now, how do I know if this is going to be a fake out? Well, we're going to have to see the price action and the volume dipping down below this level, potentially fast, maybe slow. If the volume is relatively low on this movement down and we do get a bounce and we get acceptance back above this low over here at 27,100 range, it is likely to have a much larger recovery up. So all of the opportunities, it's not about catching the absolute low level, because we do not know if this is going to break down and go to $25,000 range. It's all about knowing that there is a sign of strength. We are getting acceptance back above the lows that have been created here, which would be the end of the third wave, and then we are getting back up here for that ABC kind of correction. Now this ABC correction can, it doesn't need to go all the way up here. At least I would say to the end of the fourth wave. This is if we do go down and test the lows. Now, the fourth wave right over here is at just under $28,000. So we could just expect, several $100 pump, all right, if we were to get that acceptance back above the level after creating that fifth wave. We do not know how this fifth wave is going to be. It can be absolutely destructive and is going to take us all the way down to the low $25,000 level. So that is definitely a possibility here. And remember, for all of those crypto traders out there, my #1 crypto trading platform still is Bybit. I've been using it for over 3 years now. You have $30,000 worth of bonus to be claimed at the rewards hub. Once you sign up, you go there, you claim the bonus, you follow the steps. This is to pay fees and losses, guys. Make sure to take advantage of this insane bonus. So if we do not test, let's go to the 1 hourly time frame. If we do not test the lows here in the next coming hours, and we do get a recovery to much higher levels, this is still going to be part of the corrective fourth wave. We do have 1, 2, 3, all right? The lows haven't been tested yet. This could still be part of that fourth wave. So we'll be paying very close attention here to see what could happen. What are the major resistance, all right, where we could get heavily rejected. This fourth wave can easily come all the way up to the 50% Fibonacci level from the start of the third wave, right? So we got the start of the third wave all the way down. Okay, we haven't tested the lows. If we do test the lows in the coming hours, I would say that is the part of the fifth wave already, right? There's no more fourth corrective wave because the lows have been tested already, and we are likely either to create that ABC kind of correction or have massive momentum here to the downside. It all has to do with what kind of price action is created here. So if we do have that move down here and we get that acceptance above the 27,100, that is definitely going to be a sign of strength. Remember yesterday we talked about, hey, if we do successfully break down here the 26,500, the leg down to 25,100 range is going to be very, very aggressive. It's going to be like another capitulation phase like we did have the last few days, going from $30,000 to $27,000 in less than 48 hours. So if we do not break out successfully from this level, we could get a huge bounce here as a larger relief rally. Remember, if we do go here to the 4 hourly time frame, I was explaining here how this zone is empty with volume. And what also this means is that the bulls potentially want to defend this level. When we take a look at the fixed volume profile here from this range, okay, as you can see here, and from this range to this range, we can see that huge gap, okay, right? For the moment, all of this is insane support. The large gap in between 26.5 and 25k is very large. So the bulls are potentially going to hold this level in the next coming days. This is why this is a critical zone, how we need to pay attention on that price action for that possible bounce. On the other side, it's going to be relatively easy. If we do get that volume breakdown, okay, there's going to be some nice trades of several $100s all the way down here to that low $25,000 range. So like I said, if we do not test the lows in the next coming hours, which is 27.1k, we are still in this fourth corrective wave. We can go as high as 28,800. That would be the 50% Fibonacci, a very common retrace for a fourth wave. Even the 382, which is 28,365. Remember, fourth waves are usually not that impulsive, right? They do not have a major large correction. They can, but they're usually in between 382 and 50%. So that would be a zone of interest for me for taking a look at the price. Will it be worth a short position? This is only if we do not test the lows. If the lows are tested, I'm going to see this as it's already created the fifth wave to the downside, and we have the possibility of it being massively impulsive, all right? Best level to take a look here to jump into a short trade if we do get that successful breakdown from 26,500. That is what I'm going to be paying attention here, to have those scalp day trade short positions all the way down there. That would be a confirmation. And on the other side would be that fifth wave not managing to break down here successfully, getting acceptance, and here will be a massive level of interest for me to create that higher low and eat up all of the highs that was created today above $28,000. So there's massive opportunity on this scenario on Bitcoin. Now let's dive in here straight away on the S&P 500. I'm going to explain, why I still remain bullish on this stock market. Now, if we do zoom in, for me, it's as simple as these highs haven't been tested. We love to test the high, especially if it has been several months without testing it. This is exactly the 4,207 points right there. Almost tested here the last few days. Now we're having a little bit of a corrective move. And in my personal opinion, this is a level that needs to be hit, either failing to break out, okay, or actually having that successful breakout and going to my overall target that I think could be hit in the next coming weeks, which is that 4,317 points, right? So why am I still bullish? Well, basically, we have been trending up. There's a lot of bullish signs here. We did have that beautiful breakout from this neckline of this, classic inverted head and shoulder. This is very much predictable when we were trading at this range, knowing that, we are likely to go bullish. Had a move up, bounced from a monthly level. This was insanely important. When we go to the monthly chart and zoom out, we had 4 consecutive months closing and opening at that range of 4,090 points. Look at this. We have this monthly close of November, December of 2022, the close right over here of January, February open, and then this one in March finally breaking above it. So we are, inside of this range. Overall, as long as we are above, the 4,090 points, I remain bullish. I don't think we're going to successfully break down. We could correct down to those levels. Overall, looking for the highs here from February to be hit and potentially broken. And our next major level, of course, is the highs from the month of August. That would be my ultimate target level here to start thinking bearish, okay? As soon as we have that run up to that level, this is a zone where I'm going to be very much interested in shorting, okay, depending on what kind of price action is created. Always having good risk management. Overall, like I said, this still looks bullish. There's no reason to be extremely bearish as long as we're above this huge monthly level, which is the 4,090 point range, okay? Soon as we do dip below that level, guys, I'm going to say, okay, I'm not bullish anymore. We are looking for much lower targets, such as the monthly low from March, which is at the 3,840 points. Okay, so we'll be paying close attention to what happens on the stock market also in the coming days. Thank you, and I will see you in the next one.